on to the second area that has sort of created some turbulence among stakeholders, and that's got to do with Section 68 that provides for tax on unexplained cash credits. Essentially, now the amendment puts the onus on borrowers to ask lenders for their source of funds. What has prompted this move, Mr. Mohapatra?
Yeah, that this is a significant amendment, right? This, but we want to be very clear on what we are intending to do with this one, right? Like in Section 68, if there is a credit, that is, there is a loan or a borrowing or a receipt or an amount against somebody else in the name of somebody else in your books, that means you have received the amount from him, whether by way of loan or borrowing or normal receipt, right? The taxpayer has to explain that where the money is coming from, right? Where the money is coming from. He has to identify, right? Now, in the case of the private companies, what we have done that, the verification of the person is whose name the credit stands. For the private companies, we were going up. Now, we were looking at the share capital, share application money, and share premium, right?
Right.
On a source-to-source verification, right? Source of source verification, right? We can go one step forward, right? It was only limited to that part, source of source verification. Now the source of source verification, right? Inquiry, we have extended it to loans and borrowings, right?
Yeah.
The point is that has been probably it will not be stated in so many words, but in whispers it has been stated, and it has been confirmed in many of our investigations. Life is difficult for an investigator in the income tax department or for any other agencies, precisely because whole set of entry providers operating in gray, in what you call, in not in dark areas of the economy, they are intent on introducing illicit cash and unaccounted investment through layering of various accounts, right? Entry of cash from at one end and through layering of 14, 15, 17 bank accounts appearing as a cash credit in the 15th account, right? It's a very onerous task of going to the real source of the deposits, right? Real source of that deposit in somebody's account, right? If the loan or the borrowing is untainted, it is coming from the right source, right? And from a man, not a straw man, but man with credibility and credit worthiness, identifiable. There's no problem, no worries for those kind of investment. But if the aim is to rotate the unaccounted money through layering, Section 68, the new provisions should be coming hard on that.
Sure. I do want to understand from you how practically it will work, sir. What are borrowers expected to do now? For instance, every time a startup raises capital, what documents or evidence is it expected to ask from the lender to be able to then, tell you, the department, a year or 2 years or 3 years down the line, that look, this was from a genuine creditor, there was credit worthiness, etc. So what is the diligence that I need to do today?
No, see, Section 68 specifically in the proviso or in the explanation, it excludes some defined categories in which you cannot investigate any further, right? That promise remains. This Section 68 is never meant to be targeting a particular sector, right? It cuts across sectors, across all statuses, right? So there is nothing to fear. The point is Section 68 is not redrawing the provisions of verification of the cash credit in any manner, right? But it wants to stop the layering exercise, which has gone on unabated for a long time, and we want to come hard at this racket.
Sure, I get your point, sir, that it's an anti-abuse provision, but the fear stems from the indiscriminate use that we've seen, coming out before courts. For instance, where documentary evidence shows genuineness and creditworthiness of the borrower, proceedings have been initiated and courts have set those aside. That's where the real fear is stemming from.
No, see, at the end of the day, uh, statistically, you can prove me right. Statistically, I can prove you right also from the other side, right? Anecdotally, we could be both right in our own versions, right? One exception to me may be a rule to you. So let's be clear that this has been brought about after a lot of thought, after years of doing research in this area, right? And how it is implemented, how smoothly it is implemented, um, is an area which will work very closely, right? Section 68 is one part of the whole fabric of the department, right? And it is not even, it has been an oft used provision in some earlier times. But at this point in time, if you look at the kind of additions being made in assessment orders, right? Section 68 will not be there up there, right? Section 68 has been very sparingly used in recent times. You can have a study on that one, but from my gut would say that this is what is happening in the field. Section 68 has been used sparingly, but in real good cases, right? Anecdotal evidences would say that the courts could have thrown many cases away because of proper lack of verification or something. But use of Section 68 also has come down quite a bit.
Okay, so implementation wise in day-to-day transactions, what has changed? Could you sort of put that in perspective for us?
No, nothing has changed. Nothing has changed on the field. And
so what I meant to ask is, when I'm raising capital as an entity, share placement on a private placement basis, what is it that has changed for the assessees or the borrower after this amendment?
No, that nothing which has changed. Point is, if the pool of money which is coming from some source is untainted, it is coming from genuine sources, right?
So to ascertain that genuineness, I need to do some exercise today, right? Maybe ask questions that I wasn't asking so far.
No, see, at the end of the day, just the PAN or the bank account do not suffice about the regular nature of the remittances being made. Take it from me, the PAN number or the balances in the bank account don't really conclusively prove that the remittance is from the right regular sources, right? I don't want the taxpayers to get into second and third degree of investigation to find out. They would rather be busy in the business rather than looking at the bona fide of the the money coming in, right? But due diligence, in whatever way you can, to cut out that there is an angle of illicit nature in the funds which you are receiving, that would help. And the telltale signs surrounding that investment, surrounding the money which is coming in, from your gut feel or your market experience, a taxpayer would very well realize where the money is coming from and whether it is coming from right sources or from sources which are not to be relied on.
Okay, all right. I will not sort of delve further into this because, once this provision is rolled out April 1st onwards, we'll know, how the implementation is working. The only hope is that the department lives up to its promise that the use will not be indiscriminate and not irrational, and there will be a guidance that will go out to field officers to use it in very genuine cases.